2022 June Paper 2R. Ali provides consultancy services to local businesses. He provided the following information. You can see two specific dates at 1st May 2021 and the financial year ends at 30th April 2022. 1st May 2021 is the start of the financial year, whereas 30th April 2022 is the end of the financial year. Remember, a financial year has 12 months. Motor vehicle at cost, 34,000 at the beginning of the financial year. You have to calculate the closing balance based on the adjustments. Motor vehicle provision for depreciation, 12,000. And for the closing, there is an adjustment to calculate depreciation for motor vehicle. Once that calculation is done, you add up that to 12,000. Provision for irrecoverable debts, 140 at the start. Equity, 17,100. Bank loan, 2,500. At the end, it's 1,800. Bank overdraft, 5,140. 2060 at the end. Other payables such as wages, 210 at the start and none at the year end. Other payables, fuel, 310 and 480 at the end of the financial year. Trade receivables, income owing, 2,800 at the start, 3,270 at the end. Other receivables for office rent and rates, 600 at the start, 1,200 at the end. Other receivables such as insurance, only at the end of the financial year, 110. During the year ended 30th April 2022, total income received was 71,690. Ali took total drawings worth 35,350 and the following payments have been made: for wages 15,920, fuel 8,140, insurance 660, office rent and rates 7,800, bank loan and interest repayment 740. Additional information: motor vehicle is depreciated using straight line method over 5 years. Estimated residual value of the motor vehicle at the end of year 5 is $4,000. At 30th April 2022, income owing to Ali of 3,270 included an irrecoverable debt of 70. Ali wishes to maintain a provision for irrecoverable debt of 5% of trade receivables. The balance on the bank loan is repayable in 2024. Let's finish the first section of the adjustments. So you're expected to prepare an income statement and the elements are already given such as income, wages, fuel, insurance, depreciation, office rent and rates, irrecoverable debts, provision for irrecoverable debts, bank interest, and you're expected to find the profit for the year. Remember to use this formula for some of the adjustments which is given in this question. So you take expense or income, add opening prepaid, deduct closing prepaid, deduct opening accrual, add closing accrual, and if there are any payments received or paid, add it. Then you find the income statement value. In this question, other receivables include prepaid or advance expenses. Other payables include accrued, owing, or outstanding expense. The formula to calculate provision for irrecoverable debt: trade receivables, take away irrecoverable debt, find the net trade receivable into the percentage. Another formula to remember is the depreciation method. So in this, you take the cost minus residual value over useful life, the number of years an asset can be used. Total income received for the year is 71,690, and at the start of the year income owing is 270, and at the end it's 3,270. Let's plug in those values to the formula. There aren't any opening prepaid or closing prepaid. However, there is an opening accrual of 2,800, closing accrual of 3,270, payments received 71,690, add it. Therefore, you should get 72,160. Now, let's enter this in the income statement, 72,160 in the last column. Next adjustment regarding drawings, we'll come back to that later. Let's move on to the next adjustment. The following payments were made. Wages, it's 15,920. Let's see if we have any other information related to wages. Yes, we do have. Other payables, wages, which is 210. Let's plug in this value to the formula. There is no opening prepaid, closing prepaid, 0. Opening accrual is 210. We do not have any closing accrual, only opening accrual, which you need to deduct. And the payment made was 15,920. Therefore, minus 210 plus 15,920 should give 15,710. Let's enter this for wages, 15,710 in the second column. Moving on to the next. Fuel, 8,140, payment made. And let's see if there's any other information related to fuel. We have other payables, 310 and 480. That means it's accrued or owing. So let's see how to plug in this information to the formula. We do not have any opening prepaid, closing prepaid, but opening accrual is 310, which you deduct. Closing accrual, add 480. Payments made 8,140. So by finding this, you get the total amount of fuel, which is 8,310. Now let's enter this in the income statement. As you can see here, fuel 8,310. Moving on to the next, insurance 660. We do not have any opening other receivables, which is a prepaid. However, we have closing prepayment of 110. Let's plug into the formula. Insurance, there isn't any opening prepayment. Closing prepayment is available, which is minus 110. There aren't any opening accrual or closing accrual. There's a payment of 660. Therefore, minus 110 plus 660 should give 550. So let's enter this in the income statement for insurance, 550. Office rent and rates, payment made 7,800. Other receivables, office rent and rates, that means it's prepaid at the start is 600 and at the end it's 1,200. Let's plug into the formula. Office rent and rates, opening prepaid is 600, which is plus. Closing prepaid 1,200 minus. There aren't any accruals. However, a payment is made worth 7,800. 600 take away 1,200 plus 7,800 should give 7,200. So let's enter office rent and rates, 7,200. Now let's finish off. Now these adjustments are over. We have the last one, bank loan and interest repayment 740. So as you can see here, you had bank loan at the start 2,500, at the end 1,800. The difference between these two figures should give 700. However, you had made a payment for 740. 700 it has reduced. So you find the difference between the amount paid and the difference in the loan amount. Thereby you get 40, which should be considered as bank loan interest. Enter this bank loan interest 40 in the income statement. Now let's finish off with the depreciation adjustment. Motor vehicle is depreciated using straight line method, 5 years. The estimated residual value is 4,000. So you can see the cost is 34,000 and the residual value is given 4,000. It's used for 5 years. Therefore, you get an answer of 6,000. This 6,000 should be entered for depreciation in the income statement. Now, let's finish off with the irrecoverable debt and provision for irrecoverable debt. As you can see here, you have trade receivables amount. At the end, it's 3,270. So at 30th April 2022, income owing to Ali of 3,270 included an irrecoverable debt worth 70. Therefore, let's finish off with that adjustment. Trade receivables 3,270, take away irrecoverable debt worth 70. Therefore, the net trade receivable should be 3,700. Let's enter this 70 in the income statement. As you can see here, irrecoverable debt worth 70. Now, let's calculate the provision for irrecoverable debt. You take 3,700 of net trade receivable, find 5% of it, as the question demands to provide 5% provision for irrecoverable debt on trade receivables. So 5% of 3,700 should be 160. So now you need to find the difference between how much you had at the beginning, which is 140, provision for irrecoverable debt. At the end, you calculated, which is 160. So the difference between these two figures should be 20. So write that for provision for irrecoverable debt. Now let's find the profit for the year. Total up all your expenses such as 15,710, 8310, 550, 6000, 7200, 7020 and 40. You should get total expenses worth 37,900. In order to find profit for the year, from the income, take away the expenses, which is 34,260. Now we are done with the income statement. Now let's look into the factors that should appear in a statement of financial position, that is section B. In this question, under assets, you give a heading non-current assets. We only had one non-current asset, which is a motor vehicle. So let's go and find out the information. We didn't have any purchase or disposal, so the same value goes at the end of the financial year. Motor vehicle provision for depreciation, we already calculated 6,000 for the current year. Therefore, 12,000 plus 6,000 gives 18,000 at the end of the year provision for depreciation. Let's plug in these values to the statement of financial position. 34,000 take away 18,000 should give 16,000. Now let's finish the next section, which is the current assets. So we have three information to be listed under current assets. Trade receivables, take away the closing provision for irrecoverable debt, and then other receivables. So where do we derive this information from? Going back to the question, you have to enter the net trade receivable value of 3,700 and the amount of provision for irrecoverable debt, which is calculated for the year 160. Therefore, 3,200 take away 160 should give 3040. Let's look into the value of other receivables. In this question, expenses, any other receivables at the end should go under current assets. So we have 1,200 and 110, which is 1,310. This goes under other receivables as 1,310. Now let's total the amount of current assets. It's 3040 plus 1310 should give 4,350. Now let's find the value of total assets. Add 16,000 with 4,350. Thereby you get 20,350. This is the total assets. Now let's complete the equity and liabilities. Underneath that, equity as a subheading. So you enter the opening equity, profit for the year, and the drawings. Going back to the question, you have equity 17,100, and in the adjustment you have drawings worth 35,350, and then in your income statement you have profit for the year, which is 34,260. Now let's enter all these values for equity. Opening equity 17,100, profit for the year 34,260, take away drawings 35,350. Now you find the value here, 17,100 plus 34,260, take away 35,350 should give 16,010. Now let's move to the next section of non-current liabilities, and there's only bank loan, and the bank loan value is 1,800. As you can see in the question, at the end of the year, this value should be transferred to SOFP 1,800. The last section, current liabilities. We have only other payables and bank overdraft. Let's go back to the question and see the other payables amount. As you can see here, we have other payables at the end. These two should go for current liability. We do not have any for wages, but for fuel 480. And we have bank overdraft worth 2060. So let's enter all these figures under current liabilities. Other payables 480, bank overdraft 2060. Thereby we find the total of the current liabilities, which is 2,540. Now let's add up these figures. Equity 16,010, bank loan non-current liabilities 1,800, current liabilities 2,540, which should give a total of 2,350, which should be labeled as total equity and liabilities. So far we have completed the income statement as well as the statement of financial position. Now let's move to the theory. Explain the prudence concept should be applied when writing an irrecoverable debt, writing off an irrecoverable debt. First, try to explain what prudence concept is about. Profits and assets shouldn't be overstated. Losses and liabilities shouldn't be understated. You gain 1 mark by writing that. Then you link it to the question. Therefore, writing off irrecoverable debts ensure that profit for the year isn't overstated, 1 mark. Also, trade receivables such as assets aren't overstated, another mark. By writing this, you gain 3 marks. Next, explain why accruals concept should be applied when providing for depreciation of a motor vehicle. Revenue of the accounting period should be matched against the cost of the same period, whether paid or not. That's accrual concept, 1 mark. Now let's link it to the question. Therefore, providing for depreciation ensures that the motor vehicle costs are matched with the income or benefit earned during the same period, another mark. So this was 2022 June paper 2, our regional paper. So it has tested on income statement as well as on SOFP, and then 2 theory questions.